This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 4/19/21. This is show number 248. Well, Nick, what's doing with the market today?
So right now we're looking at the Russell 2000 under some pretty severe pressure. That's down about 1.7, 1.8%. And the Russell represents small cap companies in the United States. So that's got to be watched. The Russell 2000 is definitely starting to show more signs of distribution. We're seeing this thing starting to lag more and more. It has not made a new high with the other major indexes. This thing topped out on the 15th of March. So we've got to keep an eye on the Russell 2000 here, down about 1.75, 1.8% today. So overall, markets are a little bit on the weaker side. Yet last week they were up, obviously with Options X, and we're seeing some backing and filling today. Another thing that I find interesting is the semiconductors. Semiconductors are down over 2% today via the SMH, or for those of you that like to look at the index, you can look at the SOX. That's down 2.2%. Semiconductors are in everything. So we've seen very good strength in the semis. Recently, we keep hearing about this chip shortage, but the semis have not broken out to new highs. They went up to the old high, and then they backed off. So I think you got to watch that pretty closely. But the story of the day is volume. Volume is very, very light. So again, until we get some volume out here, we really can't make too much out of anything. You need to see a high volume sell-off day, and then you know problems are really underway.
What I find really interesting, though, is we've heard nothing but this chip shortage. Now, anytime there's a shortage in an industry, whether it's commodities, whether it's gold, silver, whatever it is, GameStop, there's a shortage of GameStop's stock. Generally, that causes a major price increase. The fact that they're declining in the face of a shortage is really flashing a big red flag, isn't it?
I think it is. I really do believe that. I've been telling my members, too, that, you know, I really follow the semiconductors very, very closely. And what it tells us is that this chip shortage, it may not be all it's cracked up to be. Basically, when you shut down production last year in February, March, April, May, so why would the semiconductors continue to make chips for things that aren't going to be built? And that's what happened. It's really just, you know, not so much a shortage, I believe, but basically just lack of production because nobody was going to work. And now people are back out there working, and, you know, now we have a chip shortage. I bought a new car a few months back. I had to wait 8 weeks for the car because they said there were no semiconductors to put into the car. So, you know, I think we're seeing this, but that'll get resolved pretty quickly once things open up completely.
Yeah, it's kind of hysterical. Remember, like the toilet paper shortage. Well, the first toilet paper shortage we ever had, I remember, was like, I think in the 70s, and it was because Johnny Carson on The Tonight Show made a joke that they were running out of Charmin, and that caused a nationwide run on toilet paper. And then he said, nah, I was just kidding, and that was the end of the shortage. Now, fast forward to the pandemic, and for some reason, they thought we had a global shortage of toilet paper, and we had a run on it, and people like went crazy going out there buying it. And even now, when stuff happens, you see the first thing people go for is toilet paper. So I'm always dubious of publicly pronounced shortages because somebody's got an agenda somewhere that a shortage really fits into, right? Just like global oil shortages, same thing.
Yeah, I agree 100%. And I think that's well said. You know, every time we hear this stuff about these shortages, they make so much out of it. It's really just to, you know, generate some more sales somewhere. And, you know, again, like I said, if you stop building something, yeah, you're not going to use a chip. So I think it's really just a lack of production. Now production's back on, and these guys got to, you know, build these chips. It doesn't take a lot to build a chip. I mean, they already have them done. The master copy is done. It's really just running off the wafers. It's not that big a deal.
Hey, so what about Bitcoin here? It's trading right now at around 55,000. It was over 60. I read some guy saying it's really undervalued because it's worth well over 100,000. But the charts don't lie, right, Nick? And you look at this chart for the past, going back to October of 2020, it's parabolic. It's a straight line up, and we know Isaac Newton, I think think was the guy who figured out he got hit in the head with an apple when he was lying under a tree, and what goes up must come down. What are we looking at here? I know you're not a big proponent of it, but in terms of key numbers of key levels, resistance points, what do you think we're looking at?
Well, right now it's fallen pretty sharply, down about 10%. It's trading at around 55,200. Over the weekend was a little bit lower. We're still testing that 50-day moving average, which looks to be right around the 54,000 level. I think it's going to break that because you had a nice bullish pattern. It failed. Best moves come from failed moves. I think this heads down to around 49,000, maybe 49,200. I think traders should watch that level. Once that level is breached, you go down to 46,000. Once that is breached, it's lights out. This thing goes way, way lower. See this thing in the low 20s. But, we don't want to scare anybody. I would say watch that 49,000 level. That's your big test on the daily chart from what I could see right now.
Wow. So it really does remind me of exactly what happened in 2017 where it hit 20,000. And I wanted to buy it, but I thought it was going to retrace 90%, go down to 2,000. That was my mistake. It only hit like 2,900 or 3,200, depending what exchange you go to. You can never get the straight price on Bitcoin. It's perfect timing because Coinbase just went public. What about massive shorting of Coinbase to affect the price of cryptos? Does that become a possibility, Nick?
That does become a possibility. For me, I avoid Coinbase at this stage of the game just simply because it's just too new. Nobody really I can't really make much out of a chart. I'm a chartist first and foremost. So, there's no moving averages on there. There's no price patterns on there. Basically, it's an equity that opened up at the low 300s. It went to $429. Now here we are today looking at Coinbase around $330. So, it dipped about 100 points from its peak, but, we don't really have a chart pattern. But you do have some other Bitcoin plays out there like GBTC. That's Grayscale Bitcoin Trust. This really replicates pretty well, not perfectly, but it really does give you the similar type pattern of Bitcoin. And this was also a parabolic chart, and I think this is probably headed down to around the $43 level on the daily chart. But if that breaks, it goes a lot lower. So there are some vehicles out there you could use to try to short this thing. Other stocks will go up with Bitcoin, sometimes Square and Tesla. They'll fall today. Tesla, in fact, is down about $27. It was down a lot more earlier. Square is down $10 today. It was even down a bit more earlier. So, those are stocks like that. You can look at Overstock that has a high Bitcoin correlation to it. So there are equities out there that you could use.
Hey, I don't know if you follow Ethereum or not, but on Thursday, Ethereum hit an all-time high of 2,516 and change per coin. Right now, as we're speaking, and this can change rapidly, let's face it, we're talking cryptos, 2,146. So it's down nearly, 15, 16%. So it's gotten hit worse than Bitcoin has.
Yep. Ethereum is, the stepchild to Bitcoin, and, it's like silver is to gold. So, you'll see these things move in tandem, but sometimes the weaker one can get hit even worse. So you have to really be careful with these things. They're not for the faint of heart type trader out there. You got to really have some grit to try to stay in these things. And, I don't like them because I just don't really get them. You need fiat currency to buy them. And basically they're something that are going to trade on people's momentum or sentiment. I just
emotional.
Don't.
Purely
it really
emotional.
Is. Yeah, it is 100% purely emotional. It's well said.
Hey.
And that just doesn't resonate with me.
Can you put together a Bitcoin chart for us with some trend lines on it?
Sure. I absolutely could do that. I will do that.
We'll flash it up. We will put it up on the YouTube channel and try to get it up for the podcast if we can. And appreciate that. So finally, gold and silver, really interesting story here. And we have to mention copper as well. But gold and silver, you mentioned when we were talking that the yields are up and gold and silver haven't budged.
Yeah, they're showing excellent strength right now. And that just tells you there's an underlying bid right now in gold and silver. I'm going to talk about the GLD today a little bit because that gap down this morning, and I believe GLD traded as low as 165.74. Right now it's at 166.33. It's actually about to go positive now. And that's telling you there's some underlying strength there. When we look at gold futures today, gold futures were down over 10, 11 points this morning. Now just down, $4 and change. So we're really seeing very, very good strength there. And, I've been talking about the gold miners, but full disclosure, I own the GDX. So I just have to let everybody know that I own shares in the GDX. I have owned it since it was $31. And, that's holding up extremely well also. And even on Friday, it was down big and actually finished positive on the day. So I love the action in gold right now. It looks somewhat resilient to me.
And we're almost at $1,800, right?
We're getting there. Yeah, we're getting very, very close. I mean, right now, gold futures trading at $1,775.50. Just 25 points away from target one on the gold price that I gave. So we're getting real close, and it's been a very, very nice bottoming pattern. My favorite pattern, one of the most bullish patterns you'll find out there.
All right. Well, we're going to see what happens next with that for sure. We got to talk about copper. You've been a raging copper bull for the better part of the year, Nick. Today, copper on the spot broke $4.30 per pound. It's up 30 cents just in the past week. The futures price $4.24 per pound. It's making a pretty bullish move, isn't it?
It is. Copper's just been somewhat resilient, I have to say. My only knock on copper is that the move has just been so incredible, and it's gone parabolic. We did have a little bit of a pause month in the month of March of 2021. So last month, copper did pull back a little bit, well needed. I think it still needs to work off some more of an overbought condition, but this thing has been just an absolute powerhouse. In fact, if you look at the chart, and I could send you one of these charts too. Sure. I mean, this has just gone from underneath $2 a pound to, right now sitting at around $4.25 a pound. It's just been an incredible run, and probably one of the better runs I've ever seen in this metal.
Yeah, and I can't remember what the high was in 2011. It was either 440 or 480, maybe 470.
Yeah, the high in 2011 was 465.
465, right. I knew it was in that range. So we're heading for a new all-time high in copper.
Yeah, we're going to probably go challenge it. I would think that's a very good possibility. Now, do you clear it there? Usually you'll peak above it for a little bit. But what you want to see here, if you really want copper to go a lot higher, is to see some consolidation first and then clear it. But if it clears it now, if it gets up there now, it's so parabolic, you got to be careful that it could pull back pretty sharply, because this thing, I mean, there's barely any red on that screen since March 2020. Yeah, this thing is just, it's just been green every single time for a year now, over a year now. It's been incredible.
Yeah, well, the political situation has helped it. It's also heading towards a deficit. Demand is higher regardless, whether it's EVs or housing starts here in Florida, wherever it is. One EV uses as much copper as one house. And then the electrification movement is on to get rid of, all that stuff, all the polluting internal combustion engines in every phase. I mean, look, there's even construction vehicles around me that are running on electric now, surprisingly enough. So no surprises there. But remember, when Nick tells you a consolidation is probably coming, just take a look at the way gold consolidated from August 7th of 2020 to recently before you go poo-pooing it. And for more information on that score, go to inthemoneystocks.com, Nick's site, and make sure you monitor the Twitter feeds at ITMS, at Nick Santiago 01, at Kerry Lutz, and send your emails to my personal email address, kl@kerrylutz.com. Nick, we will resume tomorrow.
Sounds good, Kerry.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago 01.